All right, what's up, tycoons? What is up, traders? Super excited for today's video. We're looking at GMX. All right, I'm going to break this down for you guys. We're going to go over some of the current price targets, why we're looking at those, why we're really paying attention to those. And then we're also going to break down the strategies that you can use to be able to further improve your success on the battlefield that is cryptocurrency trading. I like to say it's like going to battle, it's like going to war. You need to have the proper weapons at your disposal, and you need to know how to use those weapons. So in today's video, the things we're going to learn about are the major fib retracement levels, the 38.2, the 50%, the 61.8%. I'm going to teach you guys how to use those levels so that you can understand price action better. We're going to look at the MACD, which is one of my favorite indicators to predict a massive move coming to the downside. And then we'll also take a look at the relative strength index, okay? And you can also use this to really help gauge whether or not you should be buying into something or whether or not maybe it's a good time to wait, okay? So make sure to smash the like button and subscribe to the channel if you're new, and we'll get straight into it. So currently, here's the targets and prices that we're looking at on GMX, okay? We have our major breakout level right here to the downside, which was 44.72. We were able to break through this level, and we have three support levels down here. I like to call them bearish price targets when we're looking for price discovery to the downside. All right, using the fibs to generate these. Okay, so it's not me just drawing random support lines. It's actually a mathematical formula coming up with these levels for me. Now, again, we are looking at our three major retracement levels. The way you use these, I'll give you a breakdown real quick, is we come down, you retrace up, and you continue the trend. Okay, this works to the upside and to the downside. Nothing is going to move in a straight line up, and nothing's going to move in a straight line down. So if you come down in this case, retrace up to your major three retracement levels, and in this case, we hit the 38.2, and you get a rejection, most likely you're going to continue that downtrend, right? And we've already established a new low. Okay, so that's how you use the fibs. I'll give you guys a quick breakdown, and you can see how it works to the upside and to the downside. Okay, here's another example right here. Obviously, it's been a bear market. We're in a downtrend right now. You can see we came down, we retraced up to our 50% retracement level this time, not the 38.2. We got a rejection, and ultimately we continued that downtrend and established a new low. All right, now, as I said, this does work to the upside as well. So a really good example of seeing a trend continuation, because that's all that these fib retracement levels are going to do. If you break through these levels, that's when you're going to get a reversal, right? If we would have broken through and above, we could have gotten a reversal. But in this case, we take our swing low down here, connect it up to our swing high. We see we come up, we retrace down right around the 50% retracement level, and then we continue up higher and make a higher high, right? And like I said, this works in a bull and a bear market. So, you can really get a good gauge on when something is just getting a normal, healthy retracement or whether it's getting a reversal. Right here, we can see again that we're connecting our swing lows up to our swing highs. You see, we come up, we pull back, we retrace right around the 50%, and then we continue that trend and head even higher on the token. Now, here's a really good example of using those breakout levels. Okay, when I look for bearish price targets or bullish price targets, I make the 100% retracement level in blue, so that way I know it's my breakout level, right? And these were our lows right here. So we're looking, if we broke out past these lows, we had three price levels down here. We have the 1272 extension, the 1414, and the 1618. Now, clearly, you can see those levels were very respected and validated. We came down, we tested this level, we broke through all of these, came down to our 161.8, and then ultimately that's when we got the recovery, right? So if we go back to our current price levels right now, we've already broken through our breakout level of 44.72. All right, we've hit our first price target down here to the downside of 42.66, and we also hit our second price target down here at 41.59. So if this thing wants to stay bearish and continue bearish, there's a high likelihood it's going to head down to our level down here of 40.04. Look at how well and respected these levels have been already. If we zoom in some more, okay, you can really see how it's working, and why I really like to use these versus just drawing some of my own support lines with the naked eye, right? So we come down, we consolidate a little bit at this first level, we break, we consolidate a little bit here, we come up and get a little breakthrough, right? But look where we retrace to our 38.2 retracement level ultimately before coming back down, testing this level and breaking through as we are today. So it's a very, very useful tool for you guys to use. Now, what's also very nice, again, is this MACD. So I'm going to pull up the MACD now and show you guys how to really use this MACD. And remember, I said I really like it for sell signals, okay, for an exit signal. So you can take this two ways, right? If you're long in the position and you're in profit and you get a MACD sell signal, now's the time for you to put a stop loss on or close your position, because most likely we're going to get a sharp move to the downside. If we zoom in on the candle chart real quick right here, I'll go ahead and show you guys. Here is where we got our MACD sell signal right over here. And you can see there was a very sharp move to the downside. Now, this isn't by coincidence. This happens multiple times. And what really helps out a lot is when you can combine some signals together. So in this case, what we're going to be looking at is a bearish chart pattern known as a rising wedge, indicated by this trend line here on the top and this trend line here on the bottom. You see we zigzag, and the price action is just zigzagging in between here, and you get a sharp move to the downside once you break this major trend line right here. As you can see, we got the MACD sell signal also right here. So now we have two things telling us, hey, now's not a good time to buy. I need to be very cautious, and I need to throw a stop loss in my position if I am in the play, because most likely there's going to be a sharp drop to the downside, right? And you can see this thing, fell very heavily after we got the MACD sell signal and the bearish chart pattern breakdown. It fell over 20%. Okay. Now another thing that I said I was going to mention is the RSI. So what this is, it's the relative strength index that's going to measure the relative strength of a token at its given price. In this example right here, you can see we have a high and we have a lower high, right? So, this is up here and then it goes a little bit lower. This is actually a bearish divergence, because if you notice at this point, the token itself is actually going in an uptrend and creating a high and a higher high, right? We have a high, we have a higher high over here, we have a high, we have a lower high. So this is known as bearish divergence. It's an indicator that you may see some bearish activity. So now we actually have three things telling us we could see some, a sharp drop or some bearish activity. Number one is the bearish divergence. This pops up first. This pops up right here. Okay. And then the second is our chart pattern. We get the break of our chart pattern. So that's number two. And then number three is the MACD sell signal. Now we have three things telling us that there's going to be a move to the downside. Now you can use this either direction. Okay. And you can use this in bull markets. But again, we are in a bear market. So a lot of these signals that we're going to be looking at do happen to be bearish. Okay. But there's some really good strategies for you guys to start learning. We'll go and zoom back in the chart just a little bit more, just so you guys can see. All right. And what are we seeing over here? Well, we're seeing that we're overbought, right? The relative strength index is overbought here. Now, if you don't know what overbought is, it's above this dotted line right here. Now, I personally like to color mine to red. Okay. And the overbought level is 70. Okay, so I change it to red, so that way I know, I kind of have like a seller's mentality here, right? Like I'm not looking to buy when things are overbought, because there's a high likelihood that you will get some type of pullback. Now, just because something's overbought doesn't mean it can't go higher. Here's a great example. We're overbought right here, and look, we still go up higher, right? But what I like to do is combine it, right, with some other signals. Well, here we can see we're overbought. We're hovering in overbought territory throughout all of this. So I'm not comfortable buying in this position personally, right? I wouldn't be happy or feel safe, heading into here, even though the price is still going higher. Sure enough, we end up getting a MACD sell signal afterwards. So our first signal that we could have some bearish activity, relative strength index overbought. Number two is going to be this MACD sell signal. And if you take a look, there was yet again another sharp drop. Okay, we dropped about 11% right there. So there's no exact formula to predict how much of a drop is going to be. If it's going to be a 10% drop, if it's going to be a 50% drop or 60% drop. You just have to, go with the price action and take the signals for what they are and really use those to start making some consistent profits, as consistency is better than chasing, 100x gains every day, 1000x gains, 20x gains. That's a really good way to start blowing up your account. Now over here, we're just focusing on the MACD right now. We get another MACD sell signal. Again, it's when this red line is going to cross below the white line. That's your sell signal. We got a sell signal right here, and you can see there's a very sharp drop. Now, we did happen to drop exactly to our 38.2 retracement level. We held that level of support very nicely, indicating that, most likely we're going to continue this uptrend that we're on. Over here, we get another MACD sell signal, right? And the relative strength index is overbought. So we see RSI hitting overbought levels, telling us to be cautious, right? And that's right about here that we're overbought. Shortly afterwards, we get the MACD sell signal right here, and you see we have a sharp drop. But look, again, we're bouncing right here at our 50% major retracement support level. So, hopefully you guys are understanding these concepts and really how to use them. You're using your fib retracement levels to see if it's a reversal. If we would have broken through these levels, we would have had a reversal to the downside. But instead, we're doing a good job of holding our 50% retracement over here. Even after a MACD sell signal, we're doing a good job of holding our 38.2 retracement level. And it's a good indicator that we're showing strength and most likely going to continue that uptrend. Okay. Over here, we're seeing the same things again, right? We're seeing overbought on the relative strength index. Okay. We're hitting 70 overbought. We're consolidating sideways a little bit. We get a MACD sell signal right here. And you see there's a nice drop to the downside. So, it's really, really good to start learning some of this stuff and learning these strategies. They're going to be very, very useful and very helpful, along with chart patterns. Okay, so here is a really good example. We had a few chart patterns setting up. We actually had a a falling wedge indicated by these two trend lines right here. This is a bullish pattern where you're looking for a breakout to the upside. Then after that, we actually made an inverse head and shoulders. So if you take a look, we came down, here's our left shoulder, right? We came up, here's our head, here's our right shoulder right here. We pulled back down, and then we got the nice inverse head and shoulder to play out. Now, also another pattern that you can start to identify is going to be the bear flag, right? So we'll zoom in a little bit more on this one so it's nice and clear for everyone to see. And a bear flag is going to be indicated by a sharp move to the downside, right? So this is going to be your flag pole. And the flag itself is just going to be this channel right here. It's a little bit of a consolidation absorption channel, and it's absorbing that price action to the downside, consolidating. And once you break your trend line here, you're going to have another sharp move to the downside. Now, ultimately, that ended up setting us up for the inverse head and shoulders, and then setting us up for the much larger falling wedge that we had. So hopefully you learned something new in this video. If you did, I'd really appreciate it if you like and subscribe to the channel. I do want to mention I do viewer request every single week. So if you want to see your token, your cryptocurrency in the next video, it's very simple. All you have to do is comment down below, and I'll be happy to make a video on it for you as soon as I can.